the man of the moment, Ashish Chauhan, Managing Director and CEO of Bombay Stock Exchange. Mr. Chauhan, good morning. Thank you for joining us. So what should we start with? Why equity market hours have not been extended, or how life will change now that BSE has got a nod for commodity trading? What should we start with? You can pick and choose.
We basically have a note for commodities, as you said, and we plan to start on October 1. We have applied for the contracts in precious metals now. We will also be applying for the energy contracts, and so slowly you will see a lot of action on BSE's commodity segment. We have got a very large number of members who are interested in the commodities trading on BSE, and they have all given their interest to BSE. So effectively, the commodities market is clearly on its way. Most of the regulatory compliances and licenses which we had to obtain have been obtained, and as and when the newer contracts are approved, we'll keep on introducing them. We have also tied up with various vaults and warehousing agencies for ensuring that the settlements of those delivery contracts happen on commodities. So effectively, commodity is something we have been ready for more than 3-4 years now. We also started trading in commodities in GIFT City, Gandhinagar, India International Exchange, which is trading close to $1 billion a day. It's larger than DGCX and NCDEX in some ways. And so, although our media doesn't take notice, but effectively, slowly, BSE is becoming very, very large in many of these areas. And even in currencies, BSE is now the largest exchange in India. International, interest rate futures also we are very large. So effectively, there are many interesting trading markets which we are doing well. But we are also doing well in distribution markets like mutual funds, SMEs, IPOs, and other things.
Right. So we'll talk about some of those areas. I'm aware of the Star platform, what you've created, but I have a very simple follow-up question, not on BSE, but on the commodity market per se. When commodity trading was introduced in India for the first time, couple of years ago, more than a decade ago, the proposition was that commodity markets are bigger than equity markets and they should grow in proportion with the growth of the underlying economy and underlying commodity market. The economy has reached to $2 trillion, but yet if I look at the commodity market in India, the commodity trading market in India, it is still dominated by 2 or 3 large categories: crude, gold, maybe one metal here or there, and silver. Why is that?
No, I agree with you, and I think one of the reasons is that we have not connected the real economy or real markets of commodities with the futures markets or options market of commodities. They have stayed away from each other. In fact, we have also in the past gone with the settlement prices, which are basically international exchange connected. So effectively, we have not connected it to Indian industry or Indian economy at all, and that's where I think SEBI is slowly taking steps to ensure that the delivery-based derivatives contracts happen and they are connected to Indian prices rather than foreign prices and so on and so forth. But the journey won't be fast. It would take a little time for everyone to get used to the deliveries. It will also take time for everyone to get used to the Indian pricing and so on and so forth, and Indian standard deliveries and so on and so forth. So all associations, all trade participants will have to actually agree to a particular way of doing things, and it should happen. But it's for me, over last 3 years since SEBI has been merged with FMC, a lot of changes have happened, and market has become more compliant, the players have become more compliant, and now government is keen to connect the futures market with the real markets, and that's a very heartening thing.
Right. So, Mr. Chauhan, from a duopoly in equities to a three-way tussle now in the commodity derivatives, will this ensure liquidity and facilitate price discovery? What size of a pie would you be happy to grab?
See, for us, we work more on creating facilities for the investors and participants rather than worrying about market share. We are basically a regulatory organization, a compliance organization, and that is what we try to play a role in rather than trying to compete unnecessarily. And that's where at the same time, if you give better quality of technology, better margining, better risk management, better deliveries, then naturally people will slowly gravitate to you. But how fast, how far, nobody can predict. Sometimes it happens faster than you think, like what happened in the currency derivatives. Nobody gave a chance to BSE. Even now, nobody is actually realizing, nobody is talking about it, but BSE became larger than other exchanges by miles now. But in equity derivatives, BSE has not done so well. So effectively, you cannot predict a priori where you will be successful and how fast. But you need to continue to work hard, and that's what BSE will continue to do.
You are also a big player in the mutual fund distribution platform now, the STAR platform. It's a very big platform now. It has become one of the biggest in India. The fact that commission structures have been reduced by SEBI earlier this week, it will have an impact on distributors, and also it could have impact on the way the way platforms like yours are making money or making the spreads. How will life change for your mutual fund distribution business?
So basically, our mutual fund business is the largest distribution platform in the country now. Not one of the, but the largest, and by miles. In fact, the largest ones are actually riding on our platform. We are the back end to most of the large platforms now. And last month we would have done 29.7 lakh transactions of mutual funds. Almost 40% of all new investors to mutual fund industry are coming from BSE Star MF platform. In fact, BSE Star MF platform is saving mutual fund industry 300 rupees per transaction. That is what the estimate is. So effectively, if the mutual fund industry goes through BSE Star MF each time, they will save 300 rupees per transaction. That will help them meet the SEBI objective of reducing the cost. And that's where we think overall the BSE Star MF platform has a great future, because it has automated the entire framework for the mutual fund distribution, but also it has given comfort and convenience as well as certainty to all the mutual fund investors, the IFAs and everyone else, that their transaction will be completed, which was a very difficult framework earlier on in a manual basis. Even now, when you go manual as a mutual fund distribution, it's a very, very troublesome activity. If you go through the BSE Star MF, you get to sell all mutual funds, all schemes, direct or indirect, in electronic format, and direct payment to client or through the broker. And so we have given many facilities which brokers seem to be liking, the IFAs are liking, and the investors are liking. Over last 1 year alone, probably we did last financial year 1,75,000 crore of mutual fund distribution. This first quarter of this year, we did more than 50,000 crore of mutual fund distribution. So effectively, BSE Star MF is the mutual fund distribution platform of India, and it is so low cost and is continuing to add so much value to mutual fund industry that will help them meet SEBI objective of reducing cost to the investors.
Right. But Mr. Chauhan, just wanted to understand, because besides the mutual fund platform, you've got SME, you've got bond platform, you've got currency derivatives, and now commodities as well. Tell me, what is the revenue as well as the profit pie looking at? How much of these each segments contribute to your profitability, and where is it that you see your revenue mix actually headed in, say, the next 1 to 2 years?
See, currently the maximum revenue comes from the traditional businesses, which is the listing and the trading of equities. Currency derivatives have started contributing some portion of it, around 10 to 15 crores. The mutual fund distribution will be probably 25-30 crore this year, and is continuing to grow. In fact, we started charging token sums this year only. Till last year, we were not charging mutual fund industries, and we may increase the charges a little higher because it was a token charge, and at the same time, we will continue to save them more than 300 rupees per transaction. So there shouldn't be a problem in terms of minor increase that BSE may come out with. But effectively, these are the current revenue streams which are there, which are going to grow in some ways, like mutual fund, in currency and all. The bond distribution, we are very, very large. Last year we distributed almost 3 crore of the corporate bonds through the BSE bond platform, and year before that we did almost 3.5-4 lakh crore. And so effectively there is a large demand. In fact, SEBI came out with a new regulation or a new decision to allow 25% of the new borrowings from the large borrowers through the markets, and that is where the BSE bond platform is market leader by almost double the size of the next sort of exchange. And that's where we think slowly, as and when time permits and market situation permits, we will be able to charge some reasonable sums. But currently we are not charging much on our bond distribution. We are not charging much on other small little platforms which are very large in terms of market share, but not contributing much on the revenue part of it. We also have India International Exchange, which is not charging at all, but it's doing almost close to $1 billion transactions a day. And similarly, we have a insurance distribution coming up where we are going to be a minority shareholder, but it's going to be again an interesting platform. We have also applied for a power trading exchange now with PTC and ICICI recently. So there are many such initiatives in the pipeline currently, but the revenues continue to be coming from the traditional revenue sources, except that now this year mutual fund and the currency derivatives started contributing significantly.
Soon 20% plus of your revenue and approximately 15% plus of your PAT will come from revenue streams which did not exist or did not existed, let's say 2 years ago.
Yep, I didn't get it.
No, my question to you is that right now commodity trading has started. The Star Mutual Fund platform has started. These are new revenue streams which you've added. So how soon 20% of your revenue will start coming from revenue streams which are new revenue streams which you've added?
It remains to be seen, but our mutual fund distribution is growing at pretty much 8 to 10% month on month over last several years. Of course, once you become large, probably the growth comes down, but the absolute number goes up. Similarly, commodities, I don't know how far we will be able to do things there in terms of the volumes as well as charges, bond distribution, but we are pretty large significant players in many of these areas, including currencies and interest rate derivatives. So when they grow up and when we have market power, we may be able to charge some minor sums or reasonable sums as and when we have that kind of abilities. So currently it's difficult to say when the new businesses which are considered new businesses today will end up giving 20-30% revenues, but if they grow up very fast, then probably next 2 to 3 years we may be able to see those days. Yes.
Questions. Your other income is very large. That's because traditionally you've been sitting on a lot of cash. What is stopping you from giving cash back? Because that's a policy which in a sense is now getting rewarded by markets. IT companies are considering a buyback. A lot of other companies which have surplus cash, they've started giving cash back to their unit holders and shareholders. Are you thinking on those lines?
Basically, what we do is, as a policy, all our operating revenues, operating profits, almost all of them are given out as dividends. Our dividend yields is one of the highest in the country today on the listed front. That you might have observed. Second thing is we completed a buyback recently, and we almost had 166 crore of buyback completed over 6 months period. So we do continue to work on ensuring that our shareholders are kept satisfied. At the same time, we are a regulatory agency and a highly regulated entity, and there we need to have sufficient capital in our balance sheet so that the regulatory capital required by us and our subsidiaries like India Clearing Corporation, ICCL, or India International Exchange, International Clearing Corporation, and so on and so forth. Those also, their capital requirements are also met. So effectively ours is a large regulatory capital business, and there will be continuing need of that kind of amounts, but additional money which we have will certainly be slowly returned to the investors, either by way of dividends through the profits route or by buyback as and when the board and the shareholders approve.
Okay, Mr. Chauhan, it's a promising next few years for you. Good luck with that, and I'm sure we'll chat again.